Hello and a warm welcome to my channel. Ask me a stock and I'll cover it for you from a long, medium to short-term perspective using the studies of Ichimoku, which is a Japanese-based multi-time frame analysis, and harmonic trading patterns derived out of Fibonacci. So if you would like me to cover a stock for you, do mention it in the comments section and I will take it up. Please note it should be from the listed space and for either a large, mid or small cap, no micro cap stocks, please. Now, a disclaimer, this is not a trading or a investing advice to you. This video is purely an educational talk based on the studies of Ichimoku and harmonics. Please do your study carefully and thoroughly before taking a decision regarding your trading or investing in it. Also, please note no monetary fees or any advisory transaction cost is charged for any of this video. Now, today's talk is ONGC, India's largest uh, crude oil and natural gas company. It is currently executing 25 major projects, out of which 11 are for development and 14 are for the infrastructure. While there was been a increase in revenue quarter on quarter for the last 2 quarters, the stock company has been seeing a decline in net profit during this period. Now let's go and analyze the stock further and see what the charts are telling us for it in the long, medium, and short term. While I always cover the stock, as you have been seeing in my other videos, from the higher order, that is from quarterly, monthly, and downwards, this one in ONGC, I'm adding a new feature today, which is its comparison with crude oil, which I will cover. Once, let me cover the stock's individual performance. So, in the quarterly charts, you can see that it's had a phenomenal run all the way from listing time 99 all the way to 2014, then a big slump, a slump which lasted for a period of 6 years. That's a huge period of decline, rank underperformer. But then from the pandemic low, COVID, we've seen a fantastic move in the stock, giving a 8x return to investors from their very, very good performance all the way. The quarterly chart currently showing a support at 235 and then a support all the way down at 180 at its baseline out here, which is going to remain flat for quite some time. Let's have a look at the monthly charts and try to analyze what lies ahead out here. In the monthly chart, one can see there is a inverse head and shoulder breakout which took place in the month of July 23, and that's a crucial one which I'll show you later, and how beautifully the stock has performed since then in this breakout out here. We already discussed the major underperformance over a longer period of time, and then a huge breakout in the stock, which has done almost 2x its Ichimoku price theory, from where we saw a small decline coming in from August 24. So almost a year of decline for this stock taking place right now. Now the monthly support is at 235 as per Ichimoku, where it is currently sitting. The month has just started of August. Below 235, the next support coming in straight away at 200 odd levels, which was the April low for the stock. The resistance in the monthly is at 270 currently. 270 is from where we saw a swing high fall coming up, a lower high. So that's the level we are going to look out for in the monthly. Let's have a look at the weekly time frame. In the weekly time frame, again the stock is gone completely sideways since the month of end April, but that's the case with most large caps in the Nifty, where momentum has completely dried out in most of the cases. And now the monthly also, sorry, the weekly also coming at a support of 215 and then down to 200 to watch out. So 200 common to both the monthly and weekly scenario. Future Kumo is currently bearish for the stock out here, and the resistance coming in at 270 again matches with our month monthly. But before that, at 250, also resistance sitting out here, 270, and then at 290 odd, there is a third resistance sitting in the monthly. Let's have a look at the daily time frame and try to analyze it. In the daily time frame, one can see a bearish flag out here, flag and pole structure out here. So I just remove the Ichimoku for a second. You get the idea, which is almost done its target. The bearish flag and pole target is at 230. The Friday low is 234. So a little bit more pending or almost done, you can say, for this bearish flag and pole structure out here for ONGC. The resistance in the daily at 230 right now, 35 and 240, sorry, 240, and then all the way in this gap area at 250. There's another major gap out here at 310, but 235 to 250, then 265 are notable resistance, while support where the flag ends, and also a long flat Senkou V of Ichimoku 230, then down to 225 and then 200. Let's have a look at the hourly time frame and analyze what lies ahead for the stock. You can see out here there is resistance at 240 to 245, big ones out here, then 245, and then finally at 245 out here. Support is at 235. That's the last support for the hourly. Now, let's have a look at the comparison chart first and then try to analyze what overall looks for the stock. Now, before I go on to further analyze the stock, I would like to inform you that my courses on harmonic trading patterns, Ichimoku, and trading psychology risk management are available. These are made into videos along with PDF, level wise, chapter wise, breaking into small videos of 20-25 minutes each segment, with loads of examples for both bullish and bearish scenarios. Also on how to do swing trading, pullback, throwback, support resistance trading. Both Ichimoku and Harmonics are available in Hindi as well as English, so you can pick whichever one you want. Trading psychology risk management is an extremely important aspect for traders and investors who want to come in with large amounts. And either traders ignore it or are not aware of it. And this is one of the main reasons why we keep hearing from SEBI that 90% traders in the market are losing money. The course is extremely detailed and with bonus material, which is first technical studies apart from Ichimoku and Harmonics, which complement them and which will help you in reduce your risk management in the trades. Number two, relative rotation of sectors and stocks, that is at any given point which sectors are doing well, and among the sectors which stocks stand out, you will be able to catch them accordingly. Number three, based on the market scenario at any given time and your own risk reward appetite, which option strategy will suit you. And finally, the fourth point is the self-assessment toolkit, which will be taught on how to analyze your spot, that is your strength, where you should continue to focus, your weakness, where you need to work on, opportunities where you can improvise, and threats, areas of the market which are not suitable for every individual and where you can ignore them. The detailed description of all the courses is there in the description box. You can check it out in the link. And if you have any doubts and queries, you can shoot out an email to me. Now let's go back to analyze the stock. Like I said, I'm going to do a comparison of ONGC with US oil, that is WTI oil, and try to show you how the stock works in synchronization with crude oil. So you can see most of the time, I'm going back from 2008, every time there has been a correction in crude. This is the crude one, and this is ONGC. We see ONGC also correcting a crude rally, ONGC rallies, crude going sideways to slightly up, ONGC doing a brilliant performance. Crude decline, ONGC declines out here sharply. Again, a crude rally, ONGC's mediocre type, in line. And then again, a sharp decline. And so do we see that till the pandemic. So always in sync with crude, except for a small period. Again, here you can see crude rallies, ONGC rallies. Crude declines, ONGC also decline. Now, there is only a small period from September 2023 till June of 2024. That's not even a full year, where we've seen crude decline and ONGC rallying. So that's a very small period of working inverse to crude where the movement has come. But apart from that, again from June 2024, you can see crude on a decline, ONGC also on a very, very sharp decline. In fact, at this stage, when crude did not do too deep a strike, ONGC saw a very sharp decline, making up for that inverse relationship which it had with crude from last year, from September 23. So again, you can see now crude in a mode like that, and so is ONGC doing the same thing. So overall, when crude rallies, ONGC also tends to do well in line with crude. Now let's come back to the crude chart, ONGC charts, and try to gauge what the mood looks like for ONGC going forward. So in my reading, if the level of 235 on a monthly basis or 200 on a daily basis or 215 on a weekly basis are not held, okay, we're going to keep all three levels open, are not held, then the stock could be in some serious trouble on the downside. Right now, 235. So level wise, if we take, and for the hourly, I would say 230, 60 minutes time frame not held, then the stock could be in selling pressure on the downside, where if 200 is also not held, then we are looking at this inverse head and shoulder breakout level for a retest on the downside near 150, because the stock, since its breakout from this inverse head and shoulder, uh, could do that. So 200 is like kind of like a Lakshman Rekha for longs here. It could pierce all its way down coming out here. But if 200 held monthly, it bounces back nicely. It could push its way up. Of course, in the way down, it's got support at 180, 190. It's not going to be a one-way traffic down. It could be something. So those are the levels on the downside. For the upside, traders for the short-term derivative like me could look for those levels to trade for shorting. While on the upside, the minimum expectation for me to be bullish in the stock is above 245. I would like to see if the stock starts sustaining on a daily basis above 245 and then gradually look for 270, 290, 300, and over that period of time start building longs in it. Of course, 245 is the first level I would look at. 270 next, to get more confident with longs on the upside. For upside still all the way till 425, which is the next Ichimoku upside level. So right now the stock is for me not in a tradable zone. I would not be looking at long short, in both sides, because 230 is too close for the bearish flag and pull target out here. So more of swing trading zone between 245 to 230 odd, breakdown below 230, or gradually start building on the upside above 245, 260, like that towards the upside. So overall, as one can assess and do their uh, investing or trading accordingly. So I do hope this video is of help to you. So please do like it, share it, and do follow me for regular stock and index ideas. Until then, all the best with your trading and investing.